Hey, Jamie, Steve, what's up?
Well, good afternoon, everybody, or evening, depending on where you are. I guess on the East Coast, we're about to be in the evening, post 5 o'clock. Steve, what's
Yes.
happening?
Just another Monday, Jamie.
It is, it is. And everybody, friendly reminder, next Monday, I think I'm right here. Correct me if I'm wrong, Steve. Market will be closed, right?
For Memorial Day.
Memorial Day. Yeah, it always sneaks up on us, man.
Oh, Jamie, you're the harbinger of good news. Thank you so much. I think, though, you might not be correct. I think it might be the third. Let me look that up. I'll get back to
Let's just take a quick peek here.
you.
The next Monday is the 27th.
And let's see. You are correct. They're going to hit it early instead of do it late. So thank you, Jamie.
Yay!
Next Monday is a
Okay.
holiday.
All right, I'm good for something sometimes. All right, hey, just wanted to get that out there, everybody, because those holidays do tend to sneak up on us. Matter of fact, we always have a few people hit Trade Ideas support on those days and go, "Hey, my product's not working. The scanner's broken," and we're like, "No, market's closed." But anyway, hopefully you can avoid that. So welcome everyone to another edition of the Office Hours, May 20th. May's almost in the books. We're going to be creeping into the summer soon enough. So without further ado, let's take care of the legal stuff, and just want to make sure everyone in attendance is aware of the fact that everything we share with you, all the plays we point out, all that good stuff is strictly for educational purposes only. If you do need investment advice, what to buy, when to sell it, all that good stuff, please take the time to seek out a registered investment advisor or another licensed individual like a Series 7 stockbroker that can legally dispense that type of information to you. So everything we share with you guys is for educational purposes only. And for the regular attendees, you know the drill here. Bear with us just for a second because we always like to give the new people who might be joining us for the first time a little bit about the community that we fostered around the award-winning TI technology. And it all kind of starts over here on the left with the trading room hosted by Mr. Barry Anderson on a daily basis. He gets the room open about 30 minutes before the open and does a fantastic job not only at moderating that room of 500 to 600 people on a daily basis, but he also showcases his trading style and the way that he uses trade ideas along with it. So whether you're a seasoned trader or someone who's just starting out, that room is a great place. Lots of people in there sharing their ideas. Recently gave the trading room a little upgrade software-wise, and I think they've finally got all the kinks ironed out. So running smooth in the trading room with Barry. Another little caveat here, the price is great because there is no charge. If you have taken the time to research trading rooms over the web, any of them that are worth their salt, you know that they're not free, but that is the case with ours. So get in there, take advantage, can do you some good. Of course, on the 5 p.m. Webinar circuit for the week, you got myself and Steve today. Steve's gonna do the week and Andy's gonna ride shotgun with him. Bring on the Hump Day Q&A demo with the CEO and founder of Trade Ideas, Dan Merkin, along with our Chief Technical Officer, Mr. Brad Williams. So always interesting with those two. I'd like to give peeks of new tech that's coming down the pipeline. Andy's going to round out those 5 p.m. Eastern webinars with the Trading Studio, and I ride shotgun with him. Gets us on over to Friday, change it up a little bit. Friday support session, 11 a.m. start time Eastern, and going all the way to 2 p.m. Eastern, assuming the crowd is there. So that's what we have going on for the 5 p.m. Eastern webinars, but that's not all. We've got TI University as well coming at you 4 times a week. These guys all begin at 12 p.m. Eastern, Monday through Thursday. So beginner 101 on Monday, all the way up till advanced 401 on Thursdays, which I teach myself. So come one, come all to these guys as well. If you do have to be somewhere like working, can't afford the time to engage in these in real time, fear not. We've got all of these recorded on our YouTube channel as well. So if you can't be there live, which is the best, you can watch the pre-recorded versions as well. Okay, so always like to show this chart, and I see that we've got another chart to look at here. Ooh, exciting. This is our subscriber growth since we introduced the first AI module at the very beginning of 2016. which is the first Holly module, Holly 1.0, what we sometimes affectionately refer to as the Holly Grail. But the chart speaks for itself. Since we brought that technology online, our subscriber base has been increasing every year, and it's going to be interesting to see what that bar for 2019 looks like once the year is over. Now, on to the next news slide here. So what you're witnessing here are the Brokerage Plus statistics. Now we've got demo orders in orange and we've got live orders in blue. So you can see how the orders going through IB have been increasing month to month or quarter to quarter, as I can see from down here. This is the first time I'm seeing this chart as well, so bear with me. But this is total order flow. Now we can't tell which ones are Holly automation and which ones are just basically people using
Custom.
the custom functionality of Brokerage Plus to execute. But things are going as we had hoped, because that volume that people are punching through Brokerage Plus on a month-to-month basis is on the uptick. And I think
I'd buy that chart.
Well, I'm sorry, what was that, Steve?
I didn't mean to talk over you. I said I'd buy that chart right there.
Oh, you'd buy that chart. Yeah. I thought you said
lower left to upper right.
Mm-hmm.
Lower left to upper right is always a good thing.
Yep. So just slowly increasing. I think we're on par to finish this month with another 20 to 25% increase from prior month. And once again, ladies and gentlemen, Brokerage Plus, it's not just for auto trading Holly, although you can do that, but it's a very intuitive, what we believe to be a superior execution platform that lays on top of IB. Makes it a lot simpler to trade and use the advanced functionality that we've all come to grow and love with Brokerage Plus. So we'll get more into detail on that as the days progress or the weeks progress, but wow, nice to put it in a visual perspective there, Scott, versus a numerical, looking at the numbers every day in the back office. All right, on to the good stuff. So, hey, you might be surprised. We actually had a gap today. Imagine that, another gap down. Gap. That's the theme for the opens as of late. So, Steve, I guess if you're ready, I'll kick it on over to you and we can just take a look at the overall action.
I got it all zoomed out and ready for you.
All right.
Just hello, Michael, welcome to my desktop, everybody. Just a quick rehash. I got a big zoomed out view here of the S&P. It shows a lot of stuff that's been happening. Big bear market there for half a day, but we're still in the range. And again, the range has been predicated on things in the past, meaning this high up here, this 52-week high. Go ahead and zoom in because it makes it a lot more easy to see the last few weeks. That high corresponds to what happened last year, 2 weeks ago. 1, 2, 3, 4 days in a row, it tried to get above and most importantly, close above that orange line, which again is the all-time highs. And we were unable to post a closing candle above that all-time high. And after the 4th or 5th day, the market gave up and pulled down. And guess where it pulled down to? Again, we look left back to this pivot level in the 2, 3 areas of resistance, eventually became somewhat support. We saw earlier last week, was slightly in that territory below the orange line and then popped right back up. And we had nowhere to go. So we basically are defining our range now, guys. This is our range, 293, 294, we'll call it on the roundup, down to 280.50, we'll call it. That is our range. What is it, 15-point range? What is that, 14-point range? Yeah. So that being said, here we are in the middle of our range with nothing but an absolute hot mess of our moving averages, candles, wicks, elbows, and asses flying everywhere here in the last couple of days. And I even mentioned, I think on the last webinar, last couple of weeks, an airplane, draw an airplane. When an airplane starts to stall out of the sky, it starts to buffet. And then it falls down. And so that's basically what happened at the all-time highs. Found our support down here and we kicked it back up into the range. So it's really hard to try and get some definitive ideas of where we might be going from here looking at this current chart, because again, 2 things, we're smack dab in the middle of no man's land and all these moving averages are becoming a complete mess. I'm seeing a lot of bigger elongated candles. Look at that. Our ranges in the last couple weeks have been a completely different story than the ranges we had back here on our way up, the roller coaster on the way up, and then the volatility kicks in on the way down. So where we go from here again is I mean, it's kind of hard to tell. If you had the gun to the head, we're still in an uptrend, so that uptrend hasn't broken. I mean, for the most part, this is still kind of a higher low, excuse me, and that's what defines a trend: higher highs and higher lows. So it's a mess, but the trend necessarily hasn't been broken. So I guess that what that means is that if we break below this orange line anytime in the near future, things could get interesting. I'm not calling for it, I'm just saying that's what we need to watch for. One thing that isn't really exactly bullish on this chart is that the way the moving average is crossed over right there, that's not a good sign. And then the 10 period crossed again over the 50 on Friday. Well, for the last couple days, notice how these candles, they have had a hard time pushing through and closing above this declining 10-day. A lot of top tail wicks in the last couple days. That's not necessarily good, but again, I'm going to be watching this level crucially down here to see what happens, because everything else is just going to be noise here in no man's land, and it's hard to trade off of noise. You're pretty much guessing in terms of what direction is going to be. So that is the story for the SPY. Again, the case made for the upper band and the lower band of our range makes perfect sense when we look back in history, but that's what we're working with now. That's where the buyers are lurking down here and the sellers are lurking up here. But the intraday stuff is a bit of a hot mess. But again, those wicking candles to the upside are not exactly bullish for the moment. So it's possible we may test that lower orange band here pretty soon. Let's take a look at the NASDAQ. NASDAQ got a little bit of a different story today. I'm going to show you what happened. NASDAQ was down 1.7% rounding. SPY was down 0.7% rounding. Why? Why is that? Why did the SPYs take a bigger gap down, and why did the NASDAQ Qs take a bigger gap down today than the S&P? Very simple answer. And I don't know why, but the reason is these banks. Look at my sector view here. The regional banks and national banks finished positive on the day. Broker dealers finished positive on the day. XLF is right there. The financials. There was something about the financials today that the S&P was kind of holding on to, and that's why it was not as bad of a day over there in the S&P as it was in NASDAQ Techland. NASDAQ does not have a big weighting of financials like the S&Ps do, so that's where your divergence kind of showed up. And divergence isn't a great word. That's where the difference in negative change ended for the day. The NASDAQ's a different weighting. You got your FANG stocks, Facebook, and let's just quickly, Facebook down today, Amazon down today, Netflix down today, red candle, Apple down today, red candle, fighting back after some big drops. So this is the NASDAQ stuff. This does not include a whole lot of financials, and so that's why the NASDAQ had a rougher day. I thought that was interesting. Back to the charts for a moment, though. You know, for the most part, the guys and myself and Andy and Michael and Jamie, we talk throughout the day, talk a lot throughout the day. And we're all starting to watch a lot of the same stuff. And one of the things that kind of was interesting today was there was a pretty good pinning of the price below the 10 period moving average on my intraday 15-minute chart today. There was only about 25 minutes. We got a little bit of slop here, busted through that moving average. And a lot of times I say, you know, once a candle closes above that moving average, all bets could be off on momentum. Well, it's not always a definitive statement, because this shows you that it did punch through and then it went right back to its lower findings again. And I'm pretty sure Jamie is going to talk a lot about the very first data point that we had this morning. Very interesting. I know he's going to elaborate on that, so I don't want to steal his thunder. But the market got right back under that 10 period moving average and just had a tough time breaking back above it all day. Let me go to the NASDAQ, you know, same situation over there, and about the same point in the middle of the day, we did have a little attempt to move higher. So if you were short today, looking for a short continuation, yes, this candle had to bother you. But as it were, price action fell right back into line, and then once again, look at that, it was held down for the most part for the rest of the day. So always interesting to keep an eye on what the 10 period moving average is showing us if the market's gapping and in motion, especially when we get a gap. Look what happens here. The price, the moving average starts to come down, and the price starts to see it coming and says, oh boy, I don't like that. And at the first blush, it did throw the price action back down. Again, a little bit of choppiness there, but for the most part, that was the order of the day. That's about all I've got. We'll take a quick look at the IWM, which was down, I think, only, yeah, same as the S&P. And then technically that IBM's flirting a little bit more with, this is the line drawn by Trade Ideas Technology, the swing exit, and I agree with that. It's a pretty good pivot point there. We don't want to see NASDAQ, we don't want to see IWM break that horizontal line. Remember, as we've been talking a lot about the ETFs and the different index ETFs, this one's been having the most trouble. I mean, look at how much space is still here between, the current price and the respective all-time high. Not necessarily the case with NASDAQ and S&P. So if we do get a break in the IWM, let's keep an eye on that tomorrow, because that could be a precursor for possible selling. Again, I'm not saying we're going down. I'm just saying these are the things I'm going to be watching. And the IWM has been the lagger for the most part for a long time now, and it's just not getting itself into gear either. And then lastly, the Dow. There's never really much to glean from the Dow. It's only, I think, 26 stocks, if I recall. Maybe I'm even wrong on that. But interesting to note, it looks a lot like that S&P. The moving averages crossing over, and the last 3 days here, it cannot wick above and close above this declining 10-day moving average. So then Dow might have another date here with this 200-day moving average in the near future. But we don't know what's going to happen. I mean, the buyers just might step right back in and remind us all that this is, in fact, still a bull market down here at these areas if we do go down and explore them. So if we get a weak close, if we test these levels again and the candle winds up closing below there, it might be time to put up some caution flags. But for now, I just think we're in the middle of no man's land, chopping around. In the last couple of days, I've had a hard time closing on highs. We may be revisiting these levels of support soon and see if those buyers are still there. And that's really all I got for what we're looking at. One note quickly before he comes in, I'll talk a lot about it tomorrow, but Newmont was the trade of the week, and I'm pretty happy with the way it did. It closed up positive for the most part, gave a little bit back at the close, but this is a swing trading idea. It's not a day trading idea. If the market continues to creep lower and get defensive, well, the gold miners might just decide they want to break out of this base. And one of the reasons, again, I'll talk tomorrow, was the Newmont was the choice for trade of the week. It had a really solid base down here and got above its 10-day moving average and tested it, popped back up. And it just looked like it was ready for a possible trend reversal. So that, in addition to, trust me guys, the cupboard was bare on the typical scans that I go to this weekend and Andy goes to and we all look at. There wasn't really much in there in a lot of the traditional scans that we have been using. So it was kind of more of a discretionary call, and for the most part, it kind of worked out today. We'll see if there's any follow through tomorrow, but we'll talk more definitely tomorrow when I do my webinar. So that's all I got for you, Jamie.
Good stuff, Steve. Thank you very much. I'll grab it back here. And I think I know what you were referring to earlier. Probably referring to those compare count readings we got after the first 15 minutes of the open today. So let's talk about that. And I've got another good example here. Well, actually a good comparison, because the CC windows that we're referring to, or window I should say, is this one here that I always like to take a peek at 15 minutes after the open to try to get an idea of the underlying currents of the market. We got more buying, we got more selling in the big caps with accelerated volume in that first 15 minutes. Sometimes can be a good indicator of what's to come. Now, here's the catch. A lot of the times, well, I should say some of the time, the move is immediate. Other times, it is not, right? And today was a good example of the first move in the overall market being counter to what we see here. Now, what we're going to do is we're going to rewind here. I'm going to pull up the daily chart here on the SPY, as you can see. And this is last Friday right here. Now, keep in mind, Thursday, we were coming down. It looked like we were going to come down here and fill this gap, but it didn't happen on Thursday, all right? Then Friday comes along, and the compare count readings were massive to the upside on that Friday, but the initial move was counter. We came down here, filled that gap, and then whoosh, it was off to the races, okay? So we had the same kind of setup, but to the opposite side on Friday, where massive compare count readings, but the initial move is counter, all right? Same thing today. So what we have on those readings, we had this, which, talk about this all the time. A significant bias is, we like to see 55% or greater. If it's less than 55, it's just kind of be a slippery slope, choppy day. Not to say that we can't get traction when the bias is less than 55%, but typically, to really get my attention and have a little bit of conviction, we like to see 55 and above. Well, today, boy, almost 70% to the downside. So we're all thinking to ourselves, okay, could be game on today, all right? But of course, what do we do in the first part of the market here? And we can see the first 1, 2, 3, for about the first hour and 15 minutes, whoosh, right back up. The move was counter. And I can't tell you how many days in the past where this has happened, but in the end, we do go down and punch new lows. Now today, as we were coming down to these lows, volume on the smaller time frames just was not there. This hold down move was very slow, methodical, and low volume. Could explain why we just came down here, punched new lows barely, and then little gasp at the close in the last 45 minutes, getting back up to the 10 period that you see there. But just as Steve was illustrating earlier, you can tell that the 10 period there was pretty much pegging it all day. I was joking around with Steve earlier. I'm like, man, today's trading day, I felt like I was in the Shawshank Redemption, and that quote about Andy Dufresne having to crawl through a mile of what to pop out on the other side. And if you were short early today, or you didn't wait for this particular setup to occur, it kind of felt like that. Just tickling you with a stop out by a couple pennies. But needless to say, when we see these counter moves, what was going through my head? Okay, well, we're not getting that immediate push to the downside. Is there even any room over here? Well, of course, we were focusing on this lower level down here, but a slow creep up, and then what do? We go, okay, let's see how the 10 period is going to affect it. And, it's like a brick wall. Comes up here, pops through a little bit, then we get the sideways action. Here's where, if you were short from this area here, here's where you're thinking, well, I'm about to break my pencil and smash the phone or whatever, because once again, thinking you're going to get stopped out, and then poof, doesn't happen, and we get that downside push. So interesting, because there's two ways to play these when those metrics are high. So just keep that in mind as you move forward. If you're watching the big cap compare count, just keep that in mind as you move forward. If the initial move is counter, check out the 10 period and see if it holds. A lot of the times, if it sets up, we just get the immediate push, which is always the preferred methodology. But just keep that in mind moving forward. If the initial move after the compare count readings are significant or the other, if that initial move is counter, just wait for it. Wait for the setup to occur, watch the 10 period, and make your decisions based on whether you're going to be predominantly short, long, or whether you're going to make a market directional trade, as you could have done after you saw the action around the 10 period here. Now, of course, the SPY's big price, grande price, a lot of people shy away from it because they just can't get any leverage. But remember, we've got SPXL for the long side, right, which is a triple leverage DTF. You can just get more leverage in this thing. Or if you're like me, you could have bought the SPXS today, which goes up when the market goes down. And we can see just the inverse of that. Initial move was counter. Come and find the 10 period, and it kept you in the trade most of the day. All right. So keep that in mind moving forward. The market has been presenting many good setups from an intraday basis. So couple that with what you glean from the compare counts, fold in the 10 period moving average, and see what happens. Steve, anything to add about that action that we saw today?
No, I think, in the back of my mind, I had that compare count window on my mind the whole day. I mentioned it a few times to you. In the end, it worked out if you were shorting.
Yeah, because keep in mind, ladies and gentlemen, this is what we're seeing underneath, right? This data is in an area of the market, well, as I like to say from time to time, haven't used this quote in a while, most people aren't even aware that data like this exists, much less are they paying attention to it. But I'm telling you, this little guy, it's not 100%, just like anything else out there, but the days of accuracy when the count is above 55%, Pretty mind-boggling in my opinion. Now, as a friendly reminder, whether it's this window or any of the other ones I'm going to talk about here shortly, if you want to try out any of these windows, grab them, put them in your cloud. You can always go to channel 4, and they all reside there. Compare accounts, all the windows we're going to talk about today, and that goes for myself, Steve, Andy, and Sean. All right, so let's get on with the Holly recap. So, as Steve was just talking earlier about how a lot of his windows were just kind of vacant, and he's looking for the trade of the week. Well, that goes for a lot of our favorite windows, and it seems that Holly was no exception today based on her trade count. As we can see from the toolbar up here, Holly Grail came in with only 2 trades, 2.07, and Neo pulling up the rear with 4. So we had only 13 signals from the AI today, which is a relatively low count, meaning that a lot of her strategies didn't make the cut, and the ones that did just weren't firing that much. We did have just barely, let's see, a short bias today. 1, 2, 3, 4, 5, 6, 7 versus 5, 6 longs. So just barely a short bias today, which is kind of funny that the biggest winner that Holly spit out today was from 2.0 and just happened to be a long trade. Now, you know, myself, Steve, Andy, Sean, all of us guys that are technically old dudes and been doing this for a very long time, you know, even we're not immune to missing out on trades like HIIQ today, because I saw the signal come out in real time on my metrics, and I'm like, oh, I can't pull the trigger on this long. You know, I like low floats, and we can see that float on was the strategy that triggered this. And we can see that HIIQ only had a float of 7 million shares today, ended up kicking out 1 million shares, a little bit above average. Looks like the 3-month average is 1.2 million. Came in a little shy of that, but on the relative sense, just a little bit above normal, and had pretty good volume in it today. Of course, it didn't hold up. You know, if you didn't take the cookies when you had the chance up here and here, if you kept holding on, once we got below that 10 period, boom, back down to break even or even a stop out. But on a day like today, where a lot of the action is on the downside, you know, you got to take them. But as I said earlier, I couldn't bring myself to pull the trigger, and I hope somebody out there got a little piece of this. But just kind of par for the course that the biggest winner that Holly had today, mind you, it was on risk off as well, was a long in HIIQ. Now, we always like to talk about risk on spread and how you might be able to capture a little bit of that from trade to trade. But guess what? We got risk off. We got full risk, which we're not going to talk about today because I need to get familiar with it myself a little bit more, but it's one of the new options for the AI in its reporting. So that'll probably be coming up in some of the next webinars down the pipe. Risk on from 2.0. And this is the only, well, we've got 2 on the table today. We could talk about MG and X, but we're only talking about a 6-cent better gain than what Holly scored on risk off, 7 cents versus 13 cents, you know, without spending too much time on this one. You know, she milked it pretty good. What was the exit time on that? That looks a little weird there, Steve. 154. Yeah, she got out right at the close, right? So 6 cents in the last couple of minutes. So not even really worth spending a lot of time on today. The only one that sticks out is the HIBB trade today, which once again was a long. Keeping in mind that we did grind up for the first part of the day, but definitely a lot more short setups, as we're going to take a peek here shortly when we're talking about the range breaks and things like that. But the only decent example of risk on today was in the HIBB trade. So we got a nice entry from Holly right here at 1971. A couple of things I like about this. Not the prettiest range break that's out there. The first one technically would have been right here if you want to play by strict rules. But when we see this coming into play right here, got this next little high right here as Holly is making the entry. We're right on the cusp of it. take a little pop up in that next 15 minutes, ebb and flow around the entry signal. Keep in mind, there's our friend, the 10-period moving average, acting as that guiding hand, giving us a little bit of confidence if we did make that trade before we finally get that move higher. Now, as we can see here, this is classic Holly pull the plug early in reduced risk fashion. A lot of the times when we get that sideways action after the entry, Holly's algorithm that's programmed for her audibles, and when I say audibles, then profit target, stop loss, and timed hold, we give her those two options to either reduce the risk or save the profit. In this case, trade's not moving in the direction that it's supposed to over time after, let's see here, 1, 2, 3, 4, 5. So about an hour and 15, hour and 20 minutes after she gets into it, not working. So she goes, you know what? I tried, I'm pulling the plug. She takes her 2-cent loser. But if we stayed in it and said, you know what? I still like it. I'm not scared of a little sideways movement. I like how it's hugging the 10-period. I'm going to stay in it. Our decision to stay in it is going risk on. We're ignoring her signal. We're taking more risk. In this case, would have been rewarded to the tune of 31 cents. So that's a 33-cent spread in there between -2 and 31. So really just the easy ride up, even in the face of the downturning market in the HIBB. So ironically, the two biggest winners today from Holly were both out of, well, one from 1.0, one from 2.0. They were both long trades. So that's about all that Holly gave us today. Pretty quiet over there in Holly land as far as overall. Now, sometimes Holly provideth, sometimes she does not, but a couple of good winners on the long side today. So now let's get into the things that are there each and every day. There were a lot more short opportunities from what I could glean today. A lot of the range breaks that come out of my favorite tickers. What are those tickers? Well, turbo up, family no resistance, turbo down, family no support. These were very few and far between today. We saw a lot of yellow coming through these tickers today. What does that mean exactly? Well, if I just quickly right click here and just hover over my strategies, they're the smaller caps, sub 2 billion. A lot of the IWM type stocks. Then we have 2 to 4 billion. Those are going to show up in blue. And then we've got the 4 billion and higher market caps, the big boys, and they show up in green. And it seemed like the green boys were the only ones doing any good today. So if I just kind of scroll through here, we had a couple of greens, we had a lot of yellows and some mixed blues in there as well. What I've learned from using these tickers over time is, if you got a strong market one way or the other, the yellows and the blues, as long as the spread's not too big and the volume is above average, you can get some pretty good fills and not have to worry about big spreads in there popping you out of trades. Today was not really one of those days. So when I notice a lot of greens coming through, or especially on the downside where these things are all-time lows, a perfect example of one today was CTL. So let's just take a peek here. So before I get into this, just to clarify here, we're looking at the turbo up, no resistance, which means the long side on these, we're using the opening range break on the intraday to define our risk and make sure that we're not chasing, we're getting a good price. And then the benefit of these stocks is that they will be hitting all-time highs. So when we look to the left, there's no apparent resistance, and just quite the opposite on the downside. When we look to the left on these guys, there's not going to be any support. So while it's no guarantee that these things are going to keep motoring in the direction that we hope, it's a pretty good attribute to have in a long or short trade. So first, let's take a look at the one quality trade that I was able to identify from turbo up, no resistance, and that was the HDB right about here. Okay, so here we are looking at the 15-minute intraday. We had a nice gap up. Oh, and by the way, look up here. It was a bank, Steve. All right. And, once again, looking at the market and what it was doing, you're like, it's a bank. The banks are the only thing keeping the SPY up today from mimicking the NASDAQ. So a little counterintuitive, but the quality of the pattern kind of gives us the confidence to pull that trigger, even when we see a lot of red out there. the banks were the things keeping the S&P up, as Steve said earlier. So what do we have here? We had a gap up. Clearly interest in the stock. Don't see, let's see, I was just going to take a peek at my earnings date here, but it's blanked out. But a nice clean intraday range break. We got a nice range right here. Forgot to mark the bottom up. But puts in its high, goes to sleep for what? 1, 2, 3, 4, 5, 6, about an hour and a half. And that pop right there, nice and juicy volume. HDB finished the day close to 4 on the relative volume side. Usually trades 646,000 shares, turned in a nice 1.6 million in volume today. And these metrics over here, the 5 and the 1, they were well above average all day. All right, harkens me back to last Friday when this little guy went on a massive tear. Look how similar that chart pattern looks from what we're looking at today. And you know, boom, same song, same dance. And today it was HDB dancing to the same music, right? Not quite as big as an opening bar, which is always a good thing. But basically never really had to worry about this one as the day progressed. Once again, we got that 10-period moving average fitting it like a glove. And even on this one, if you had the fortitude to do so, even an opportunity to add to the position as it plateaus up here, pops a new right here, new high right here, and then even grinds higher into the close. So once again, green big boy happened to be a bank. That's what was propping the market up today, and just high quality trade. No ifs, ands, or buts about it. And on the downside, I only saw one, you know, what I would call quality play on the downside. On the turbo down, no support. Notice it's a big cap boy as well, and nice and thick with volume today. CTL. So kind of just the opposite. In the first 15, 20, let's see, about an hour, we got the first downturn. Seller takes a break, and then we get action coming through right here. Let's see, where'd I put that guy? All right, so we get this little punch through, plenty of time to act, don't have to chase whatsoever. Anywhere in that candle that you push the button and got short was a choice entry here. And we can see little 30-minute sideways action before releasing lower. And this one just kind of went flat most of the day, and they gave us one more little kick towards the close. So not a huge winner from a dollar standpoint. Here's 1027. We didn't quite make it down to the whole number, but got pretty close. But once again, smaller dollar stock, so getting more leverage in this one. With the volume that was coursing through it today, you know, it was pretty much maintaining a penny spread most of the day, and you know, not quite as strong as what we saw on the HDB volume, but still significantly above. Usually kicks at about 13 million and almost crept up to 16 million today. So, you know, once again, green, big cap. That's not always, you know, just because it's green doesn't mean it's always going to be thick and liquid, but that was the case with CTL today. Nice and liquid, small spreads, not a lot of vacillation. So just one of those that if you stuck with it, you got paid in the end. And this is one that you could have been in, you know, not just 100, but maybe 300, 400, 500 shares because of the price. Getting a little bit more leverage, smaller move, but hey, money is money. Now, what's going to happen tomorrow? Notice how it just broke out of that range today. Might be one to keep an eye on tomorrow. CTL, you might want to monitor tomorrow, just like you might want to keep an eye on HDB as well, because sometimes once these occur, you get multiple day runs out of these things to the up and to the downside. So just might want to watch those tomorrow. Once again, it's all going to be predicated, do they set up nice and snugly on the intraday? If so, it might be worth taking a stab at. So those were the only two that I gleaned from the no resistance and no support today. And the regular versions, my turbo up today, everything was all stretched out and the timing was just not there. You'd pull these guys up and they'd be way past their sweet spots. HTP, You know, a lot of these guys today looked like this. Let's go down here a little bit. You know, the timing just wasn't there. They either had run-ups, run-downs, but that nice smooth consolidation that we like on the intraday was not present. However, that was not the case with the turbo down ticker. All right. Now, of course, that jives with the readings that we saw on the compare count windows. But of course, we know that we had that little counter move. But I'm going to revert back to that. So when we see a counter move on strong compare count readings above 55%, just give the overall market some time, consult that 10 period and see if you can make a good entry. Now, a lot more quality patterns presenting themselves to the downside today on the turbo down. Of course, these are going to be range bound, all right? Range bound simply meaning that we're going to have some support and resistance to consult here on the the daily to figure out how much steam or how much room these guys might have if we're right on our entry here. Now what I'm going to do, okay, this looks great on the 15-minute, but I'm going to go ahead and convert over to the 5-minute on these guys. Okay, because we had a, you know, this one was a double occurrence, once again, giving us the opportunity to leverage the position if we like the action that we got off of this first signal here. So what do we have? We had a gap down, little downward push, nice little 5, 10, 15, 20, 25, maybe even 30-minute consolidation right here before we get this little plink. Hey, I just cracked a low. I'm doing massive volume on the 1-minute time frame. So, you know, impossible to chase on this one, even if you got the little wick down here. A little sideways action before we get a second push down. So, you know, we got a trigger here, we got a trigger here, and then boy, it was off to the races as far as AXTA goes. So whether you sat in this one, and you know, looks like Holly would have pulled the plug on that one, right? Had she been in it, because you're getting that sideways gravitation through the entry point, but we get that second release. It's actually a very nice second setup candle. So could have sat, could have added to the position here, and then it was off to the races here. 10 period kind of keeping things intact here, but we'd probably have to flip back over to the 15-minute to get a better bead on that. And as we can see, a little bleedy on the 5-minute, but man, once this thing got kicked into motion right here, boom, I mean, just tapped it down all day. Now, if we were trying to figure out how much room we might have, you know, keep in mind, let's see, 25, 20 over here, you know, so we're getting the signal right here, right up in here, in the upper portion of that bar, and all we had to do was kind of direct our attention over here for what might be, okay? And this guy fulfilled his destiny today, getting right past there. So a great little trade from AXTA today, nice and smooth. Not a lot of pain in that one. Then we also had PPDF. All right, here we are looking at the 15 minutes. What do we have? We had that same little counter move that coincided with the market. Not coming really anywhere close to that 10 period, which is always a good thing if you're thinking about going short. But you know, a lot of the times we get tempted. We're like, oh well, if I could get a much better price up here. But keep in mind, ladies and gentlemen, that's what we call predictive trading. When we're talking about these types of plays, they're reactionary. We wait for that break to occur, and then we pull the trigger. So yeah, it would have worked here, you know, playing, being in predictive mode, but they don't always do that, all right? So we wait for the break right here. Once again, it was kind of impossible to chase this one, even if you got this wick down here. It's a great price to be in this one, a little smaller cap stock, getting shorter around 530, and then it was just nice and steady, right? Once again, that 10 period doing its job, acting as our nice little comfort whoopee blanket, and even a little time to leverage the position for some more right through this period right here. Another little range break, little sideways action, and just down, down, down. So beautiful action. This is what we like to see. We like to see that beautiful entry, and we like to see this nice steady selling. Could have played the same game here. You know, what are we doing? We're getting short over here at 529, way up here. All we have to do is consult the daily to figure out how much steam or how much downside this might have. You know, initially we'd be thinking right here, but it gave us just a little bit more, right? Everybody's trying to catch that falling knife. probably had their stops right out here. What happened? They got stopped out. If you were short up here from the nice clean range break, you got paid. So PPDF, a nice one as well. And we're going to round it out with AVLR. All right. Now, this one kind of makes me, this is kind of like the theme of the day as far as what was going on in my world today. It seemed like there was a lot of waiting going on. And hey, AVLR made you wait and wait and wait, but it finally gave you a little bit. All right. Boring, right? Got a little bleedy in the 15-minute, but how do we assess our risk here, right? Well, if this is the entry candle right here, just barely getting past that wick after the first 15 minutes, we're going to use that prior 15-minute high, which would have been right here, as that stop area. So we just tap that down a little bit right here. And just like a lot of trades today, you barely stayed in, even through here, right? So a lot of waiting today. But in the end, 69.01, you stick to your guns. You don't obsess over every tick. You let the trade do its job. You keep your hard stop because that's what it's designed for. And eventually, you got that release. And, this doesn't look like a huge move, but on a point basis, we're talking about 68.46 right here, and you had opportunity down to 66.80. So doesn't look like a whole lot, but on a percentage basis, it ain't nothing to sneeze at, ladies and gentlemen. So, this was the tamest one and still presented. But what's the key to this game? Timing, all right? Waiting for the right thing. If we've got the nice clean range break, we put the trade on if we can stomach that prior 15-minute candle as our stop loss. We don't want to short them when they're down here. It's too late. Once again, it's about the timing of these things. And is the timing lining up? Not so much on the long side today, but these guys were all over the place today and with some pretty significant volume. You know what? Let's just go ahead and circle back around and talk about, and I just want to recap the volumes here. AXTA, relative volume 1.85. The SPY couldn't do anything today. Couldn't even finish at 1. PPDF finishes at 1.97 today. And AVLR, the most boring one, showing the biggest relative volume, okay? So, like to say it all the time, volume's not the holy grail, but it can equalize things, all right? And that was the case with all of these high quality entries today, assuming you're patient and you wait for that, you wait and you wait and you wait. And what does that mean? It means you have 10, 15, 20 symbols before you find one where the timing is appropriate and you're not chasing and that 15-minute risk is definitely intact. All right. So that's about all I got today, ladies and gentlemen. Might finish up a little bit early, only by 5 minutes, but hey, compared to what the market gave us, I think that was a pretty good recap, showcasing some very tight patterns on the range breaks, not only the ones with no support, no resistance, but also the range bound ones. They were giving it out today. So keep that in mind as you move forward. Watch those compare count windows, and we'll see what happens tomorrow. Maybe we'll get some tariff China trade talk to stir things up in the market, but we'll see.
Joy.
All right, Scott, so if you're ready to walk us out, buddy, we are ready for you.
Sure thing. Sounds good. So a couple items on the way out. We've had this ebook out for a little while. Hopefully all of you have it. If you don't have it, you should get it. It's been very highly reviewed. 5 ways to win in a post-BTFD market. Both Jamie and Steve contributed chapters to it. So it's got 5 chapters, 1 strategy per chapter. It's good stuff. Go to trade-ideas.com/ebook and put in your email address to get it. And we have a podcast we release weekly. So to get it, you should just subscribe. Search for Trade Ideas Podcast wherever you listen to podcasts. Add us as a subscription, and bingo, you get the new episodes, and you can check out the past ones. We have the whole archives available. There's a code that's good for the rest of this month. Spring2AI. It is all caps because it's case sensitive. That saves 15% off of the first month or year of any subscription or upgrade. So if you're on standard and want to jump to premium, just go ahead and use that from your account management login to do the the subscription change, or for a new account, just put it in the promo code field. Any questions, email us info@trade-ideas.com. You can follow Jamie on Twitter @QuantBot. Steve Gomez is @TodayTrader. We've also got @TradeIdeas, facebook.com/TradeIdeasPros, the Facebook page to like so you can share stuff with your friends. We have a recording up later on tonight or tomorrow. You get a reminder tomorrow about how to find it. Thanks, everyone. Thanks, guys.
All right. See you next week.
Hey, thanks everybody for popping in. We'll see you on the flip side. Bye-bye.